the 2026 Nigeria tax law is all about. Following the signing of 4 tax reform bills into law in June 2025, Nigeria is set to implement significant tax law changes beginning January 1st, 2026. The reform aim to simplify the tax system, broaden the tax base, and provide relief to low-income earners and small businesses. The Federal Inland Revenue Service (FIRS) will be replaced by a new, more powerful revenue agencies. 1. Key changes for individual. Income tax exemption individual earning 800,000 or less annually will be exempt from personal income tax (PIT). 2. Progressive tax rates. A new, more progressive tax structure is introduced. The highest earner, those above 50 million annually, will be taxed at a maximum rate of 25%, while rates for middle income earners have been lowered. 3. Abolished allowance. The Consolidated Relief Allowance (CRA) is abolished and replaced with new targeted deductions. 4. New deductions and relief. Rent relief. A new relief allows for the deduction of 20% of annual rent paid up to a maximum of 500,000. 5. Investment-based deductions. Taxpayer must actively claim deduction for contributing to a retirement savings account, life insurance premiums, and the National Housing and Health Insurance Scheme, replacing the old automatic payroll deduction. 6. Tax on capital gains. Capital gains for individuals will no longer be taxed at a flat 10%. Instead, they will be taxed at the individual's applicable progressive PIT rate. 7. Digital assets. The law specifically expands taxation to include gains from digital and virtual assets. Key changes for businesses. 1. Company income tax (CIT). Tax exemption for small companies businesses with an annual turnover of up to 100 million and fixed assets not exceeding 250 million are exempt from CIT capital gain tax (CGT) and the new development levy. 2. Reduced tax rates for larger companies. Starting in 2026, the CIT rates for medium and large firms may be reduced from 30% to 25%, dependent on the presidential order. 3. Capital gain tax (CGT). The CGT rates for companies increased from 10% to 30%, aligning with the new CIT rate. 4. Development levy. A new 4% development levy on accessible profits replaces various fragmented levies, including the tertiary education tax. 5. VAT stays at 7.5%. The value-added tax rates remain unchanged at 7.5%. 6. VAT exemptions. The list of essential items exempt from VAT is expanded to include basic food, medical products, educational material, and electricity e-invoicing. A mandatory e-invoicing system will be implemented for VAT collection. Administrative reform and incentives. 1. New revenue agency. The Federal Inland Revenue Service (FIRS) is replaced by the Nigeria Revenue Service (NRS), a new body with enhanced powers to collect both tax and non-tax revenues. 2. Streamlined tax law. The new act consolidates numerous existing tax statutes into a single unified legal framework. 3. Independent tax ombudsman. The creation of an independent office of the tax ombudsman will resolve taxpayer complaints and disputes. 4. Economic Development Tax Incentive (EDTI). The Pioneer Status Incentive is replaced by the EDTI, a credit-based framework offering a 5% annual tax credits for 5 years to companies making qualifying capital expenditures. So brotherly, sisterly, stay informed.